Hey, what's up everybody? This is Jessie with Minimalist Accounting, and I have an awesome video for you guys today on fair value journal entry. We're going to begin our lesson today by looking at when the fair value option can be elected, the journal entries that go along with electing fair value option, and finally an example. Let's get started. Electing the fair value option is like a marriage. It is a commitment and is not something that can be jumped in and out of. The fair value option can be elected only when the item is first recognized, when an eligible firm commitment occurs, specialized accounting for an item ceases to exist, when the accounting treatment of an investment in another entity changes, or when an event that requires the item to be measured at fair value occurs. Journal entries for the fair value option are rather straightforward. We begin by determining the carrying value, which is the same as the book value of an item, and the fair value, which can be calculated using the market income or cost approach. We then deduct the fair value from the carrying value, and if that answer is negative, we will note that down as an unrealized gain, and if the answer is positive, we will note that down as an unrealized loss. A gain or loss is said to be unrealized if the item is yet to be sold for a profit. They are otherwise also known as holding gains and losses because they occur when we are simply holding on to an item. As for recording the journal entry, we will write the item up or down and recognize the unrealized gain or loss that we calculated in step 2 above. Let me show you with an example and work on some journal entries. Now let's say on January 1, year 1, we purchased an asset for $100,000 and elected fair value option. Well, that seems pretty straightforward. We will debit the asset and credit cash for $100,000. Now let's keep track of these values in our little notepad on the left. Let's do a column for date, one for carrying value, and one for fair value. So we know that on January 1, year 1, we have a carrying value or the book value of 100 and a fair value of 100, which is given to us. Now let's say that at the end of the year, the fair value of the asset increases to $120,000. Noting that down in our notepad, we have December 31, year 1, carrying value stays the same of 100, but the fair value is now 120. Now that we have determined the carrying value and the fair value, let us calculate the unrealized gain or loss. That is carrying value minus fair value. That's 100 minus 120. That gives us an answer of negative $20,000. Now remember, if the answer is negative, we record that as an unrealized gain, else we record that as an unrealized loss. So as for the journal entries, we are going to write up the asset by $20,000 and credit the unrealized gain, since the answer was negative, by the same amount. Let us make this change to asset on our notepad. A debit means the value of our asset went up by 20, so that gives us 120 carrying value. And would you look at that? The carrying value now equals the fair value of the asset using the fair value option. In our last scenario, let's say we sold our asset for $80,000 on January 1st, year 2. So we will debit cash for $80,000 because that's the amount that we received. And from our notepad, we can gather that the book value of our asset is now 120. So we're going to credit the asset because we have given that away for $120,000, and the remaining difference is going to be recognized as realized loss, which is the loss resulting from selling the asset. That's going to be $40,000, and our debits and credits are now in balance. To summarize, remember that the fair value can only be elected when the item is first recognized or under certain situations. And just to help put it all together for you in a slide, Here are the steps that you're going to need when recording the journal entry using the fair value option. Good luck! That's it from me, folks. Comment down below if you have a question, and I'll see you in the next video. Till then, happy counting!